Homeownership. This is something that I've been dying to talk about for some time now on the vlog, and it's something that you got to plan for way before, as a society, we've been trained to plan for. I have some friends that, regardless of their career paths and their career choices, had this idea stuck in their head from an unusually young age to own a home. And they are really a lot more comfortable now than their counterparts that might even have higher paying jobs and be living that fast life in the city or out here in one of these fancy one-bedroom apartments for $3,000 a month. And they're just living two very different lives, those people. And the reason is because home ownership is a crucial building block for financial security and for planning. These days, people are living a heck of a lot longer, but nobody's talking about retirement anymore. And I'm not a huge fan of traditional retirement plans. I might become more of a fan later on when I'm more risk averse. But as of right now and what I saw in the financial crisis, my mind is sort of made up that I'm going to be in control of my own retirement. But that's maybe not for everyone, and that's totally understandable. But I've touched on this before. Not everyone's going to be an entrepreneur, and not everyone's going to be a millionaire. So you got to plan. You got to plan for owning a home, and you know, with traditional family structures sort of not being necessarily a requirement for owning a home, you got to figure out who you're going to buy that house with, because a lot of times it's a lot easier to qualify for a mortgage, and in this competitive environment where there's not a whole lot of inventory, to have a co-borrower with you. And credit and that sort of thing we're going to talk about later on, but home ownership is a crucial building block for financial security, and that's what I want to start with today. Credit. I talk to a lot of younger guys and girls about credit, and if I have the opportunity to have that dad conversation with anyone over 18 years old, if there's some way that I can sort of squeeze that into the context of my introduction with them or a follow-up conversation, I tell people that starting to build your credit and not being afraid of that tool is the most important thing that you can do. Don't mess it up, because bad credit is a lot worse than no credit. But starting off with a small credit card and building your way up to another credit card, getting into a inexpensive lease or car payment to build those trade lines on your credit is going to make it a lot easier when the time comes to buy a house. And you know, people have this thing in their mind where, oh, I need to be X amount of years old to qualify for a house, or I need to have this many years of employment history. Employment history is definitely important, but if you start at 18 and you finish college at 22 years old and you've done a couple things, you saved up a little money, you have a couple credit cards, you might have paid off a Toyota Corolla lease at this point, now you get to step into that real job. Hopefully you get that real job, hopefully that's out there, you know, and you went to school for the right thing. But for argument's sake, let's say you're 22, 23 years old, you're getting that first job, you're gonna be making $60,000, $70,000 a year, you got this nice girlfriend or family member that's gonna help you out, you guys wanna make the move, you wanna buy a house. If you have some established credit, you could walk into that bank, you could apply for that mortgage, and you will get that mortgage. Forever. A lot of people associate this idea of home ownership with it being a forever term. I'm only going to own one house. I'm going to buy it when I have my family set up, or I have that job I've been waiting for my whole life, or my business takes off, and that's simply not the case. You can get in and out of homes. You can rent your home and buy another home, and if you buy the right home, the way the current tax code is set up, as long as that was your primary residence for a couple of years, and this has been around for a long time, your capital gain exclusion on your primary residence, you can own that house for 2 years, you have a nice little profit on it, and as long as it was your own home, a primary residence, and you can only have one at a time, any profit that you make from that house is excluded from your income. So a home is not forever, and you know, circumstances change, but the home ownership you'll find if you incorporate that into your financial planning, is a crucial part of building wealth and retirement planning. So now let's apply this to a real life situation. I have a gentleman that does some work for us. We've known him for years, and they have this building in Queens that they bought a number of years ago. It's appreciated in value. They have a few kids now and they want to move out to the island. So we had to get them a refi on their building and get them into a house, and this was a tall task. We had to find them a house around $450,000 in a good school district with 4 bedrooms and pretty much move-in condition. And I battled for the last couple of weeks. I lost a couple deals with just the insane competition that there is out there, and hopefully today, specifically today, and hopefully on the next episode I'll have an update for you, we'll find out if their offer was accepted on this house. It's in 3 village schools, it has the bedrooms that they need, the house has got 2 renovated bathrooms, a powder room on the first floor, and it's truly a move-in ready house and very close to their original range where they wanted to end up in terms of a purchase price. So I want to close with that this is doable, it's happening, and I'm doing it every day. If you want to see more of this content, the deals I'm working on, the homes I'm building, the clients I'm working with, follow me on Instagram at Pinnacle Real Estate, and please like and subscribe to this vlog. We're going to keep this content coming on a regular basis.